Hi everyone, I'll go through another oil tanker update today as a few companies that I am following have some updates and quarterly data. I'll go through and highlight the important information from DHT, EuroNav, and the recent merger between INSW and Diamond S Shipping. I'm doing this because about a year ago, I made a significant investment into the oil tankers, and I know a lot of people have done the same. So I'm hoping to keep on top of my investing thesis, and it should help other investors as well. Even if you haven't invested into the oil tankers, you will learn what to look for in a quarterly report. And at the end of the video, I'll give you my thoughts on what we can take away from all of this information. For those who haven't spent some time looking at the oil tanker thesis, well, I have videos here on my channel where I explain why I think it could be a good medium-term investment. So check that out first if you have no idea about this topic. Now, the reason I even started investigating the oil tanker market in the first place was because about a year ago, I read Monish Pabrai's book called The Dundo Investor. And in the book, Monish had made a very similar investment back in the early 2000s. He explained that the industry is not a good industry to be in. It is very cyclical, which means there are times where not much money is being made, even lots of companies losing money, but then there are times where huge amounts of money are being made. So what generally happens is when there's a lot of money being made, ship owners try to scramble and buy more ships. But ships take about 2 years to build, so there is this really long delay. Then when companies are not making any money, the ship owners try to sell their ships. But then when the good times return, they scramble again to find ships. So the supply of the ships often doesn't match with the demand. Therefore, we get wild swings in rates. In the bad times, the best companies are buying ships and preparing for the good times to return. They will have good balance sheets and good access to extra capital. So that is what we want to see from our oil tanker companies. It is one of the most volatile industries to be in, and if you can't stomach this craziness, then this is not for you. In the last 12 months alone, we have seen the rates that oil tankers can make range from $5,000 a day all the way to $200,000 a day. And because of this wild volatility, a lot of people avoid the industry. Currently, we are in a very weak part of the cycle, but there is an industry trend that is developing that I think will make the oil tankers very profitable over the next couple of years. And then I hope the share price reflects these good conditions. So current rates are really weak in the oil tanker world. It has been a bad Q1 and Q2, well, it's going to be worse. The reason is because oil demand is improving, but really slowly. The pandemic had obviously cut demand a lot throughout the world as travel stopped, but little by little, it is coming back as the world starts to recover. As more people get the vaccine and countries start to open up, travel will eventually pick up again. Look, I still want to see the world. I still want to see friends and family and have adventures to other countries. And I can't imagine humans changing this behavior too much. I could be wrong, but we will see. And I think oil is still going to be important for many more years, so I'm not worried about like electric vehicles taking over anytime soon or anything like that. So when oil demand gets close to pre-COVID levels, well, oil tankers are going to be really busy as there will be a lot of demand for them to move oil around the world. Plus, there is still going to be limited supply of oil tankers on the water. The thesis, therefore, is still pretty much the exact same. 2021 isn't going to be a good year for the oil tankers, but in the second half of the year, maybe near the end of the year, things might start looking better in the industry, and patience is going to be the key here. Okay, in my opinion, DHT had pretty good results considering the ugly market. They made a profit and even bought 2 extra ships from competitors. DHT, I think, has the best balance sheet and best management of all the oil tanker companies. It's not the cheapest though, so the upside isn't as big as TNK, for example. So DHT got about $31,700 per day for the average rate in Q1. That is a great result considering the average spot rates were far worse than that. They're more like 15 to 20,000. Earnings per share came in at about 7 cents, and look, getting any profit here was impressive. Look, Q2 is going to be tougher to get that profit. And they also offered a 4% dividend. That's fine. I don't care that much about the dividend, but at least since it is a Bermuda-based company, I don't get hit with withholding tax, and that's great for me personally. Now, guidance for Q2 was about $21,000 rates per day. That will make things very difficult to make a profit. I wouldn't expect an operating profit in Q2. So guidance for Q2, it sucks, but that's okay. Times will hopefully get better. I think we will just have to wait and see what Q3 and Q4 brings. Now in the meantime, while rates suck, DHT are focusing on getting all their maintenance and repairs organized so they can take advantage of better rates later in the year and 2022. Again, we will just have to be patient here. Now all of this could turn around pretty quickly. I don't know when exactly, but things could move fast. I'm glad I have my investments already made. I guess on the other side of the argument, maybe I'm wrong and I'm sitting around waiting for another 2 years. Look, I'll address that as time goes on. Now don't forget to subscribe to my channel so you can keep up to date with the oil tankers. I'll be doing it each quarter or whenever something major happens. The CEO, Hugo de Stoop, commented on the poor market conditions for oil tankers in Q1. He also said Q2 will be weak as well. He then went on to say that we remain confident that the market will recover in the medium term. Now, DHT made a small profit for Q1, whereas EuroNav made a loss. They made a loss of 35 cents per share for the quarter, but they still issued a 3-cent dividend even despite that loss. As you can see with the rates compared to the same time last year, things are pretty ugly. Q2 will be bad as well. Hopefully later in the year we get to see improvements. Like I've mentioned before, things can change quickly. So if there is weakness in the stock price, it's probably an opportunity, but only if you understand the thesis. Other updates from EuroNav were that they bought 4 new ships, 2 VLCCs and 2 Suezmaxes. These were not from other companies, but from the shipyards. Now I don't like this because it will actually add 4 more ships to the overall oil tanker market, thus adding more competition for everyone. EuroNav are attempting to be opportunistic and increase their fleet size while the prices are low and demand for new ships are low. Now regarding maintenance, EuroNav, like DHT, are taking advantage of the poor environment to do their work on the ships. This is good as they will be able to make more profit when the rates improve and they won't have to do the maintenance then. So Q2 is even going to be uglier because of all of this maintenance. I think it is good logical management. When the better conditions return, there is going to be a lot more money to be made. Hugo de Stoop also discussed a really strange event happening in the tanker market. Now, most analysts and industry experts are surprised more ships are not being recycled at the moment, like sent to the scrapyards. Because there are just a lot of old ships, rates are low, but steel prices are really high. And this should encourage the ship owners to make far better financial decisions in recycling their old ships rather than the expensive costs to maintain them. But apparently they are not being recycled because there are some shady operations happening where old ships are being sold to people that will use the ships to illegally trade with Venezuela and Iran. It is illegal because there are currently trade sanctions on both these countries, but some operators are getting around these rules somehow. Hugo de Stoop thinks that this is just short-term thinking and the pressure to recycle will become far greater if the rules are enforced or the sanctions are reduced. Look, just interesting commentary and something I just wasn't aware of. It doesn't affect the overall thesis, but I do want to see scrap rates start to grow over the next, say, 12 months. Okay, now International Seaways and Diamond S Shipping are merging together. The merger will keep the INSW name and the Diamond S shareholders like myself will get INSW shares sometime in Q3. The deal technically could still fall apart as shareholders have to vote, but I think that appears unlikely. So the big question is, what does this mean for Diamond S shareholders? Well, honestly, for me and my thesis, not a whole lot. INSW is a decent company, managed reasonably well, and debt levels are not a problem. When the industry improves, they will do really well, just like DHT, just like EuroNav and the others. They have a lot of assets and can survive in a depressed market for a long time without having to sell many of these assets. Diamond S shareholders will get 0.55 shares of INSW for each of their Diamond S shares. So after doing a little bit of basic math and my understanding of the deal, well, I think book value per share for INSW is going to go up. And honestly, INSW are getting a great deal in merging Diamond S Shipping into their business. Look, I'll be able to see how the transition went later in the year, so we'll wait and see approach for now. Okay, this is everything you need to know. Q1 was weak, Q2 is expected to be worse. Everyone still thinks that times will get better as demand improves, and I don't know when we will get big share price movements upwards, maybe later in the year, maybe in 2 years' time. The medium-term thesis is still solid as long as demand is going to return. And patience, patience, patience. That's what's going to be required here as an investor. I think let's revisit this in 3 months' time and see how bad Q2 was. It will also be interesting to see whether there are clearer signs of oil demand picking up. Until then, I'm not going to do anything. Pretty much forget about it. I hope you enjoy this update, and I will see you in the next video.